Good day, traders. I believe we are doing great. I'm very, very sorry I couldn't release this video yesterday, but I believe it will still make sense by doing the weekly outlook right on Monday when market has opened. It affords us opportunity to see the market in a clearer picture. All right, so let's start with DXY. Okay, of course, DXY is still bullish. Still bullish. Of course, if you look at the trend, correction, push, correction, push, correction, push. But right now, it has not made a higher high, and we are seeing some correction right here. So one thing that is very instructive to note right now is this consolidation, this level taken to the upside and breakdown. If you know how to read in your chart very well, you know this has a meaning. It has implication. Okay, that means it's about to push to the downside. You have equal high right here. The market came and pushed it to the upside and reject and push down to break the low. That means whatever corrective structure we see here is a trade to the downside. That's how I'm seeing DXY right now. And if you go to 15 minutes time frame, you will see that go to 15 minutes time frame, you will see that right now, but we are building up liquidity on top here. Just allow the correction to be going. Of course, you see this move to the downside right from here to this level. See that the premium level is right here, and the market is not yet at the premium level. So based on that, you cannot get it for a sell right now. So allow this to continue to the upside until it gets to this level. Maybe take this top, then you look for your entry setup, okay, and set to the downside. So if we have this forecast for DXY, you should know we'll get the opposite for euro dollar. Okay, we'll get the opposite for euro dollar. Okay, so one thing you should learn to do first when you look at a chart is to analyze the trend. Okay, of course, you know this is downtrend, but how is the trend developing? Here you have break of structure. This is a single wave. From here to this place is a single wave. All right, and then you have this correction, then you have a pulls down. It broke structure, so this one is a single wave here because structure is broken. All right, now if you look at this one, corrective structure, take this previous top and down. This is another wave again, and each of the wave down must have an inducement. So this last leg down that broke structure, where is the inducement? Structure is broken here, and this is the inducement. So for this level to qualify as lower low, this retracement must break this top. And as you can see, does it break the top? No, it doesn't break this inducement level. It doesn't break it. It came down. So everything the market is doing here is just in a way to come and take this top. Once this top right here is taken, we are due for a sell opportunity to the downside. So right now, allow it to keep playing. Okay, let it keep playing in the middle. Even if it like, it can come down. As long as it doesn't take this low, fine. We are still going to visit the top. Once we break this top, we look for sell opportunity to the downside. Another way you can look at it is if you come this way and break this low, creating a structure here, then in that case, this last resistance here has become your inducement. You need to come up here, break this top, then you come down again. This is how to analyze structure, guys. So, but for now, what I see is simple. Okay, what I want to see is simple. I want to see this level taking. Okay, I want to see this corrective structure break this level to the upside. Once it's taken, then you can have a trade around this corner, right here, corner. I have a trade here upon entry confirmation. Look for entry confirmation, break of structure, correction, getting. Okay, that is a euro dollar, AUD, USD. You have to analyze the trend. See right here, see the little reaction that it produced. So the equivalent one in euro dollar. This is the break of structure right here. You have this reaction level is called an inducement. Okay, and this inducement level, we now have to find out whether it fall into the zone of whether it fall into discounts or premium. Yes, right at premium. So we don't want to get involved in AUD USD except it comes to take this level. Once you take it to the upside, then we are ready to sell to the downside to break this low. Because here, there was no sign of demand right here. So everything you are seeing here is a correction for more downside. And the condition to which we will see the downside is what I've just told you guys. This reaction zone, which is called inducement, that's the last resistance or the last pullback before the break of structure. That must be taken. Okay, that must be taken to the upside before you can look for sell opportunity. Right now, even though it's making a downtrend, you know, you shouldn't take it seriously. All right, shouldn't take it seriously because I expect it to move up to the upside, get to that level, then move to the downside. That is what I see in AUD USD. Pound dollar, guys. For pound dollar, if you analyze your trend, okay, you analyze your trend, you will see that you have something like this. Okay, this break structure. Okay, break structure, but this does not take this top. Then this one comes down, break structure again. This one did not take this top. So this is a single trend. That's how to analyze it. You have this move. All this one to the downside, guys, is a single trend. It's a single wave. That's what I'm saying. This wave is not different from this wave. It's not different. It's a single wave. Because how do you know that it's a single wave? If you have an impulse, you have a correction, okay, and you have another impulse. All right, for this one, if this one is a lower low and this one is lower high, what qualifies this one to be a lower low is if this retracement here break this top. Okay, that means this lower low is confirmed and here become lower high. That's how to look at trend. If you have something like this, you have this and comes down, you do not have a lower low here right now. This lower low is wrong until you see this one break this top. If it doesn't come to break this top and come up like this and come down again, okay, before it now break this your inducement, it then means that this is not your lower low, this is your lower low here. Okay, and this is no longer the first inducement. Okay, this is not the first inducement, this is the first inducement. So once you take this first inducement, you can start looking for sell opportunity to the downside. See, most people, when the market gets to this resistance, they say they found another block here and they are ready to sell. It doesn't work that way. Okay, it will react, give you some few pips, then throw you up, then come over to this level. At times, it can even come break this level, break this secondary inducement level, this primary inducement level. You can break this one before you start moving to the downside. You look for your entry confirmation to the downside. So right now, if we have to apply the same method to analyze pound dollar, you see this break of structure. Okay, this is the resistance. This one pull back but never took it. It has to come down. Resistance. This is the inducement. Now we must take this one. The market came, it never got there. We retraced, it never broke the low. It came, it never broke the low until it comes this way. Once this level is taken to the upside, it then means that the market is now ready. It's now when you analyze the structure, you analyze the trend, you know very well, you see that it's not ready. It's in the middle right now. You can only get involved when this resistance that led to the break of market structure is broken to the upside. That is when the real, volume comes to the market, and that is when you can go to lower time frame and look for break of structure, then correction, and sell to the downside. So anything you are doing right here in the middle, you are just playing. You are playing and gambling with the money. All right. First thing, you must be able to analyze the structure of the trend of the market. Analyze the structure very well. It is proper analysis of the structure that will tell you where you are going. Right now, I've seen a break of structure here. I've seen this market move down, and I've recognized my inducement level to which I must take to the upside before I sell. Okay, now the market is operating in the middle. Look, where is the middle? This is the top, this is the middle. Okay, for us to sell, we want it to move to the top to break that inducement level to the top, and then we'll look for setup to the downside. But right now it's at equilibrium. Okay, and when a market's at equilibrium zone, it has potential to go up and to come down. And that is why when you think it will go up and you buy, it will come down and take your stop loss and go up again. So a market that is at equilibrium is indeterminate, and you don't touch it. Okay, so that's why we don't have opportunity on pound dollar right now, but we have to allow it to go up, let it buy to the upside and take this high. Okay, so the only condition where taking that high will not be necessary is only if the market moves down like this and break the low. Once you take this low, we don't need this top again, because we now have, if we now find a new inducement. Look at the inducement level. When two inducement level are very close to themselves, then they form a liquidity that must be taken for the market to move to the downside. In that case, you need this to take this, to take this level of liquidity. Boom. You don't need this one again. Don't need this level of inducement again. Then from here, you move to the downside. Okay, so that's it for pound dollar, guys. We have to be patient for it to develop. All right, the same method we have to use for gold. But we analyze this trend, we see right here, this market break structure here. Okay, break structure here. Where is the inducement level? This is the resistance before the break of structure. That's our inducement. Okay, right here, break another structure. But this one comes, take this. Can you see? As soon as you take this first resistance, what happened? Breakdown. All right, but it did not break this low. So for that reason, we are still targeting this top, guys. So it has to come, break this top before it comes down again. So we are waiting for it to come to break that top, and in that case, it will become a regular flat, move down 1, 2, and 3, regular flat, and then will come down to the downside. Is that okay now? So right now, the market is at the middle and it's not to be touched. Okay, because it can go up, can go down at the middle. We want it to go up. Another thing it can do, guys, is simple. What it can do is this, because I told you right now you have inducement here, you have inducement here. So if you take this, you expect that gold, since it did not break this low, then we expect that it can come break this inducement level and then come down. Okay, can you see? If you analyze your structure very well, you see that when by the time it has come down like this, it has achieved something. When it comes down like this, it has broken market structure, and you now have to ask yourself, where is the last resistance that broke the last pullback that broke this structure? Right here. So you want this market to come, break this top again before it to come down. In order to confirm, this one as lower low, okay, this lower high. To confirm it like that, you must have it, no, lower high here, okay? You must have it this way. So at the immediate, what are we expecting gold to do? We are not expecting downside at all. So expect that gold should come take all this level, can come a little up and then upside, push to this level. From here, you can look for sell opportunity to the downside because you have taken all these pullbacks, all this inducement level, you have taken them to the upside. Once you clear them to the upside, you can sell and go to the downside. But at the moment, it is not to be sold, it is not to be bought. There is no setup on it as far as gold is concerned. USD card. Of course, we forecasted a weakness in USD for a short period of time. So we're also seeing the same structure right here in USD card. You see this breaks this level and come down. It flashed up, and also flashed down, but it did not break the structure. It went up, came down, this time around broke the structure. So what did I say that you take note of? When you break structure, take note of the pullback that broke that structure. So you are going to take it. So right now, can you see? You see this equal top here? The market broke that equal top and came down. This is very significant. It took that equal high, that's liquidity pool, liquidity level, it took it and then come down to break this low. This is a break of market structure. And that shows that we are going to come to the downside, okay? And you can see right here, you can see a lot of imbalances. You can see between this level and this level, a lot of imbalance. So what are we to expect? Of course, you see that as you broke market structure here, you do not see resistance in between here, for which you can expect the market to go down. But let's check lower time frame. We will see something that is very close. Lower time frame. Can you see? In 30 minutes time frame, you can see that if you have break of market structure here, you have pullback here. You have pullback here. These are your inducements. These are levels that you want to take to the upside before you can see a comfortable sell opportunity. Right now, you are at this level. Right now, you are at this level, okay? And you can see the market has tapped that level, but we are not still satisfied with just tapping. We want the market to take that level to the upside, okay? Take that level to the upside. And usually, market will react at that level in order to deceive a lot of people. It's a trap, okay? It will react here and somebody will say this is resistance, this is resistance. So let me sell. No, it's a trap. Don't sell, okay? So market will consolidate here and take this level. This level must be taken, okay? And of course, you see this last candle here, last buy candle before the sell that broke market structure. And with the appearance of imbalance in the higher time frame, we are projecting USD card to come hit this level, okay? As soon as it comes to hit this level, begin to look for change of market structure, okay? Change of market environment, and then you go in for your sell with minimal stop loss, okay? Target the low, that's about 1 to 6 risk to reward if it's not more than that. But this is how you go about it, and that is how I'm also planning to go into the trade. Right now, it's still at the middle, it's not at premium level. If you take this impulse right here, can you see this is just 62? We want it to go deep into 70 to 79. That's premium level to which you can look for a sell opportunity to the downside. All right, so GBP, JPY, I went into this trade, took me out at break even. Break even. Let's analyze it in 4 hours time frame. 4 hours time frame. Okay, daily, you can see that daily, this market is still very bullish. Why do I say it's bullish? You have this move here, you have this move here, you have these two levels here, you have break of market structure. And what did I say? When you want to analyze your structure, when you have a break of market structure, look at the pullback that caused the break of market structure. You have one here, you have one here. Okay, you have the two levels there, at the two levels that was responsible for the break of structure right down here. So the first level has come to take it. That's broken this level to the upside, and then that was why this sell came. Okay, but this sell never came to break this low before it push up again and break this top. So as a result, we have right now to look for sell to the downside, whether reversal or corrective structure. We just need to see a sell to the downside. Okay, so when you come to 4 hours time frame, what do you see in 4 hours time frame? You will see a lot of rejection here. Market kept rejecting. Market does not want to move to the upside. You see right here, it rejected and sold. Okay, and right here, the rejection is taking place again. And when we go to 15 minutes time frame, for instance, you will see that market came right here and broke this structure. Okay, it broke this structure. What did I tell you? When structure is broken like that, look at this resistance or that pullback that caused a break of structure. The first one there is called an inducement. Okay, that inducement must be taken before you sell. And can you see moving to the upside, moving to the upside? What happened here? The inducement is taken right here. Okay, and as a result, you have this move to the downside. But this move to the downside never broke this low. Therefore, this inducement level is still very intact. It's still very intact. Okay? And the market came again. What did it do? It came right at the top. Can you see? Right at the top. This is what we want. So we want a change of structure right here in order to sell. So where's the change of structure? Simple. Market structure taken here. Where's your inducement? Right here. Okay? So now you want that inducement to be taken before you sell. Yes, but watch what happened. You have this move to the downside. Can you see? If you have a week like this, market first sold before it bought. So for that reason, this is your new break of market structure. Where's your new inducement? Right here. Okay, that's your new inducement. So you want that new inducement to be taken before you sell. Right here, it is taken. And then you have impulse, break of structure, correction, sell. That's how I got into a sell of GBP, JPY, minimal stop loss, boom, to the downside. But there was one powerful candle that came up and took me out at break even. All right, I sold right here. Okay, and then I was in profit. All at a sudden, this candle came. I moved my trade to break even. It took me out, and now it's flushing. So that's not a problem because we are going to get another entry. Okay, what I'm looking forward to is simple. Okay, if this is another break of structure, where is the resistance before this break of structure? Let's do it very clean. Okay, look at your structure right here. Look at your break of structure. Okay, that's how you analyze structure. Where's the last resistance? Right here. Okay, so what you want to do is you want to break that resistance to the upside before you can sell. Okay, and right here you have the first push, correction, second push this way is already at premium, then you sell to the downside. This is how you're going to capitalize on GBP JPY for a sell setup. Okay, Euro JPY, guys. Euro JPY is simple. They are all setting up. Of course, you know today is Monday. Okay, in 15 minutes time frame. All right, you see right here, correction, push up and push down to break the structure. Okay, so our structure is broken. We want this market to at least come to this zone before we look for sell. And having looked at this one, you see that as this one was coming up, it came to take this low. All right, so this is no longer our inducement. This has become our inducement. This level, this level. So we want this market to come to this level before, take this level before we sell. And look at it here, it's already developing liquidity. Here, push to the upside at this level, we look for what? Change of structure. All right, break of structure rather, correction. Then we sell right here at the top, not here. Okay, many people will normally make that mistake of saying, this is a resistance. This is where they should sell. Okay, you will be trapped. Market will trap you if you try it here. Because why should you not try it here? If you have this trend this way, guys, and this one, this level here broke this previous low, this has become your inducement. So you must take that top. So our market is developing correction here to break this top. As soon as this top is broken, guys, you just look for change of structure and then you sell euro GPY to the downside. So last but not the least, guys, GBP CHF. Okay, GBP CHF, can you see that long term is bearish, but short term is bullish? Okay, short term is bullish. So if you look at it right here, just the same way I've been explaining to you since, first thing is to analyze the structure. This is where you had break of market structure. Where was the pullback that caused break of structure? That's your inducement right here, guys. Okay, right here, guys. So pullback should come to take the inducement. Pullback came right here, took this inducement, then you should have this you have this sell. So instead of it to come right to the downside, came again, broke this structure, and then it's correcting. So if you have it this way, where's the move that caused break of structure to the upside? This level. Look at it here. Okay, so based on that, you expect this market to come to this level, even if it will go to the upside. It must take this inducement level before it can comfortably buy to the upside. So that is the structure analysis on higher time frame. Then if you look at lower time frame, you see what I'm talking about. Right, you see this structure. Anytime you see a structure like this, correction, push up to take the top and come down. Now, this coming down did not break this structure. If it has broken this structure, the pair will just sell from here to the downside. But because it did not break this structure, it has to move, take this inducement level. Can you see? That is the inducement level. It got here to this and form equal high. Okay, this market will never pull down comfortably until this equal high is broken. So it came to the low again. What did it do? Now this time around, break the top to the upside. After breaking it, we look for corrective structure and sell, because everything we are trading here is just structure. Trade structure. You trade pattern, see Elliott wave pattern. You apply demand and supply. You check liquidity point, and so all these things you just take into consideration before you take a buy or a sell opportunity. So since this level has already broken it, what I had to do was to check. It's a break of structure here. The market correct here, I got it here, boom, to the downside. So what do you need to check before you go in right now? You already see that at this level here, there's a break of structure. Where's the inducement level? Right here. So what do you want? Move, push up, push down, push up, break this inducement level, and then you now look for sell opportunity to the downside. Where is your target? You keep selling until you get to the level that I indicated in 4 hours time frame. It might not get there, but anytime you cross this level, guys, don't sell again, because you are now at discount. Okay, you are now closer to discount. It's not good to sell again. So this is just how I see the market, and this is how I want to approach the market this week. Good luck, guys. If you want if you don't understand any part of this video, don't hesitate to just hit me up, chat me up. I will definitely respond. And if any part is confusing, let me know. Of course, I told you, I love to use apply liquidity, demand and supply, and Elliott wave theory, you know, to come up with my own uh, bias, market bias. It's very important. So I don't know the style you adopt, but of course, whatever you use and you see that market move in your direction, in your favor, then you have to stick to it. All right. So pass your comments in the comment section and let me hear you. See you next time, guys. Cheers.